Hey everybody, Chuck Barone here. Monday, July the 17th, 2022. Let's get ready for another week of Wall Street mania. Trying to figure out how to take care of our retirements and save a few bucks in this country. Getting harder and harder to do, man. It's a wild and crazy time to be alive. I tell you guys, we're living history here. And pretty someday, your kids and your grandkids will read about this history. Hopefully, they won't judge us too harshly. Anyway, before we get rolling today, let me welcome everybody to the show as always. Thank you guys for your support. You guys being here every day, watching the videos and supporting the show. That's why we do this. We appreciate you guys. All right, let's look at these markets today. So we know Monday is always the day to kind of set the tone for the week. Get ready for what's to come. And this week actually not going to be as wild and crazy as the past couple. I think everybody getting ready for the Open Market Committee meeting next week. We're probably going to get it, well, I would say highly likely, 98% likely we'll get a rate increase next week. But the market today, not feeling any pressure from that at all. So the market up across the board. Stock market doing well. Dow up 76 points, continuing the winning streak. 34,585 on the Dow. The S&P gained 17 points, 45.22 on the S&P. And the NASDAQ up 131 points, 14,244 on the NASDAQ. So stocks across the board. Decent day. Stocks going up. And I'll tell you what, I've been farting around on our website with this S&P index fund, and it's doing great, man. It's doing great for the short time we've been in it. It's really been rallying. So if you're in the market right now, your 401k is probably looking a little bit better than it was. So it's good, a good thing. All right, so moving on. The bond market today. Well, surprisingly, basically a flat market. Bond market waiting to see what's to come. So basically, nothing much happening in the market today. The 10-year drops 2 basis points, 3.80 on the 10-year. The 2-year essentially flat into the thousands of points, 4.74% on the 2-year. So here we sit, bond market just waiting to see. We got some data coming this week. This data actually, from what I read about what we're going to be expecting this week, not going to be a ton of good news coming. So I think it might actually lead a little bit of pressure for this being the last rate hike of the year coming up next week. So we'll see. It's going to be a fascinating time. The dollar today, no news, basically flat, 99.90 on the index. Dollar is still under 100. I would not be surprised to see a rally coming up in the dollar, though. Getting back, at least back up over 100 on the index. But the dollar, kind of with the end of this rate hike cycle, the market discounting the dollar a little bit. We'll see if it actually is the end. Metals today, a blah day, not much happening in metals. Gold down small, $1,954.50 for an ounce of gold. Silver down 10 cents, $24.76 for an ounce of gold. So they're holding their own, man. Metals we're right in the pocket, waiting for the opportunity to climb, looking for a little bit of news, and I think they're going to get that news. I really see gold above 2,000, silver above 25, and staying there. Oil today, down at $1.27, right back in the pocket where we expect it to be, $74.15 for a barrel of West Texas Intermediate. We've been telling you guys, oil seems to be the most comfortable, trading between 70 and 75 a barrel. It has these occasional breakouts, even just last week, well above 7,500 or $75, per barrel. Now coming right back down, right where we expect it to be. Now we'll keep an eye on this. We'll see if it breaks back down or breaks back out again. But I really believe that this is where oil really wants to be. And until there's a real compelling reason for it to break out one way or the other, probably where it's going to stay for a while. Bitcoin today, losing a little of its luster, down 319 today, 29,965 for Bitcoin, back under 30,000. I think that Bitcoin, I'm sure a lot of this is profit taking. remember, guys, for every person that's buying Bitcoin right now, somebody's selling it, right? And some people sitting on some fat profits probably bought a boatload when it was 16 grand. So, I don't really think there's any compelling market news with Bitcoin right now to move it. Simple profit taking tends to be the explanation. And as we do every Monday, we're going to talk about the data we're going to get this week and when we can get it and what we can expect. So today comes the Empire manufacturing numbers, basically flat. Manufacturing neither growing nor contracting last month, just kind of there. Not any real news in this report. Tomorrow we will get business inventories. We will get capacity utilization. We will get retail sales, and that's going to be a big one, man. And we'll also get industrial production, which will give us a little bit better of an idea. These business inventories and capacity utilization, industrial production numbers we'll get tomorrow certainly will serve a little better than this Empire manufacturing thing we got today. All of these numbers, sadly, expected to be going the wrong way, except tomorrow we'll get retail sales. Those expected to be up dramatically, actually. What I was reading are saying that these retail sales number could complicate the Fed's interest rate plans. Apparently, consumers still got money, still spending it, or borrowing it to spend it one way or the other. Retail sales continue to show strong numbers. So we'll see where that comes tomorrow. On Wednesday, it's going to be real estate day. We'll get building permits, which are expected to be down. We had housing starts, also expected to be down, and mortgage bankers index, both refi and purchase, expected to be down. The real estate market and retail and commercial is even worse. Let's not even go there right now, but real estate having a tough time. These higher rates affecting this market. A lot of people want to buy houses. A lot of people want to sell them, but they're stuck because of where these rates are. They either can't afford the payments or they can't afford to sell and give up their 3% mortgage for a new 7% mortgage. Who the heck would do that? So real estate difficulties, and they'll be confirmed, those difficulties, on Wednesday with that series of reports. On Thursday, that's always the big day. We're going to get jobless claims. Jobless claims expected to be down this week. Last week we got 237, expected to fall to 231 this week. Remember last week we had the big ADP brouhaha, where they were predicting this job creation, and it didn't quite work out like that. So hopefully these jobless claims will get back into a little bit more normal number without any expectations. Thank you, ADP. And this really, I don't think if the number comes in where it says it's going to, it really won't move the market very much, but it will continue to show the job market showing some real resilience. Employers continuing to hire. Also on Thursday, rounding out real estate, we'll get existing home sales. Those are expected to be down. We're going to get leading indicators expected to be down, and the Philly Fed survey also expected to be down. On Friday, nothing happening. Friday's a quiet day for real data. We'll get earnings, and that'll happen throughout the week. Big companies expected to announce earnings. It's earnings season now, so we'll see where that goes. That probably more likely going to move markets this week than this data we talked about. I think the ones we're going to really pay attention to this week are going to be that retail sales number tomorrow, and then of course jobless claims coming up on Thursday. So it's going to be a fascinating week. Hopefully a nice quiet week leading to the Federal Open Market Committee meeting next week. We'll get that quarter point increase and get on with our lives. Okay, news you guys need. Not a lot happening to really report about today, but just a couple of quick ones. I was reading a report today showing that Americans, yay America, still have more money put away right now in savings, money markets, and stashes than they had before the pandemic came. Now this is saying that apparently people still holding on to some of the money from those stimulus checks, tax refunds, whatever, holding on to this savings, spending it down slowly. So apparently Americans still have a little bit of cash to fall back on. That's funny because, I do loans all the time, and I'm looking at people's finances, and I'm not really seeing a tremendous amount of evidence to believe that that's more normal than the exception, but according to these statistics, it is. So this is interesting. I just don't know anybody personally who has any money left from their stimulus checks, but maybe some people do. So it's good to know that Americans, even though our savings rates are declining and people are spending out of their savings, nice to know they still have some money put away to weather some tough times. Also, moving up on commercial real estate, which we've been talking about pretty regularly on this program, was reading today, now the biggest landlords, the ones that own lots of office buildings, big office space, really now starting to panic. This is just the story that the snowball's just starting down the hill, just starting to pick up steam. The story just keeps on going and going. Now I was reading today, vacancy rates approaching 22%. So no one wants to rent office space. The work from home movement, businesses kind of torn between the idea of not having as much office space, saving money there. They don't really feel like they're as productive with their workers. The employees working from home is in the office. Tough time for businesses to figure this one out, but if you're a large landlord, very difficult times coming. Very difficult times already here, about to get much, much worse, because while these vacancies continue to climb, property is declining in value, at the same time now, here comes $1.5 trillion of commercial loans that need to be reworked. And I'm telling you right now, the vast majority, 4.9 trillion of this is going to be rolled over, or hopefully going to be rolled over. And I think it's going to put banks in a very tough position of finding terms landlords can live with, or assuming ownership and foreclosing on a tremendous amount of commercial real estate. We're going to watch this stuff and report about it to you guys. It's going to be a wild one. Last, tougher lending standards now starting to set in on everything: cars, houses, credit cards, any type of basic loans. Tougher lending standards are here. I was reading nearly 22% of all loan applications last month were rejected. Everything from credit cards, cars, houses. So now you're seeing credit not only getting more expensive, but getting more difficult to get. This is going to put, of course, this doesn't affect the people, the rich, the well-to-do. They're always going to have credit available to them, even though they don't need it. This is going to affect the bottom rungs of this ladder here. The working class or lower, the lower middle class, or the working poor. We're going to have difficulty getting credit. Going to have difficulty maintaining credit as their payments spike. Truthfully, though, I never look at this kind of situation as a negative, because here's an opportunity for people to learn to live without debt. Live without debt. A novel concept in 2023, but certainly a much better lifestyle than being overburdened with debt. Lastly, to wrap up the show, veterans like me who've been in real estate for a long, long time remember the name Angelo Mozilo. He was the CEO of a little outfit back in the day called Countrywide Lending, Countrywide Financial, a company he took from basically nothing to $25 billion. Big company, one of the largest lenders in the world back before the big kablooey. Sadly, Countrywide turned in, and they really were not the culprits, but they needed to have somebody to blame, so they were convenient. Mozilo catching a lot of flack because he managed to sell Countrywide for $4 billion before it went under. Bank of America, buying the company, feeling that they were going to get a great deal, has since had to pay out over $50 billion to settle lawsuits and regulatory crap and fines connected to Countrywide. Why am I mentioning Angelo Mozilo? Well, he died. Passed away yesterday at age 84, turning the page on a rather cranky time in U.S. finance. I felt a little bad for him because it seemed to me, even though he was certainly not without sin, not anywhere near one of the worst offenders, but got the worst of the blame. Anyway, guys, that's it for the day. We appreciate your support. We'll be back tomorrow and the rest of this week to bring you guys the news you need. Till then,